In this video, I'm going to talk about the day 2 trading strategy. Hey traders, a very warm welcome to you. So what is the day 2 trading strategy? How do we frame it? What is it all about? Let's talk in some detail. All right, let's get to it. Okay, so day 2 means after we've had a day 1, let's just define day 1 first before we talk about day 2. Day 1 is a big day. And that could be either earnings from a stock, it could be a big move from news. We're on trading forex, whether trading indices, commodities, whatever it may be. It's generally something where a lot of people have been watching it, and that's either, as I say, because there's been earnings on something or because something has moved quite dramatically. So that's day 1. We defined day 1. A lot of eyeballs have been on it, and we may have seen a decent size move, a decent range on it. What's the day 2 play? Well, the day 2 play is saying, hey, listen, day 1's happened. A lot of people have watched it. A lot of people have been involved in it. I now need to be as prepared as I can for the next day, because I now have a massive edge as I would do normally after a normal day. So a normal day happens, you're going to get swings up and down, you draw your support resistance levels on, blah blah blah, whatever it may be. The next day you trade, off you go. The difference between a day 2 play after a decent day 1 is that there are a lot of eyes watching this. There's a lot of people playing it, a lot of supply demand imbalance, a lot of stuff going on. Look at this example with euro. Okay, we had a big drive, whatever it may be, it doesn't even matter. It looks like it's probably data or something coming out. It's about 3 o'clock UK time, so it's probably data here. A big drive up, consolidation, another big drive up, closing, or kind of the unofficial close at the highs. Big move, big excursion. So what do? Day 2, we're prepared. We say, okay, what do we need to do to be prepared for day 2 plays? We say, right, where are our key levels? So we got a high here. We had a good kind of level of support here. That was the previous close. This was kind of where we swung out here. This was the ultimate low of the day. Marking them down, jotting them down in your journals, marking out the behavior. Where was the most volume traded? Where was the key support? Where was the key resistance? How do we close at highs? All this kind of stuff. So you can formulate a plan for the next day, and you can kind of say, okay, if an example, this is a good example here. We dipped up, we came down, and we found support kind of early hours in the morning at the prior close, at the prior, prior closing 2 hours congestion area. A good place to go long if that's in our plan. Where's our stop going to be? Okay, that's all part of the plan as well, but we've got an area to do business. And similarly, if let's say we saw a breakthrough and we saw it congest and hold and double bottom kind of here, we can look back and say, well, actually that was the key level that we had before the break. Very nice, I want to get involved in it. Let's flip it on its head and let's look at something that completely goes the other way. Comes all the way down here, and it's coming down to the lows, and listen, it's right at the point where the extreme of day 1, and now we're approaching it. A good place for us to take a breakout, right? Because we know there's going to be a heap of stops under there. If we can preempt that breakout and get on that run, we're prepared, because we know that the whole world and its dog has got to stop under that low, and they're going to get their faces ripped off because they are all in. All these people from day 1 are in, and it's undone all of that, and loads of people are going to have to stop under that low. An unlikely scenario given, but we know if we're prepared for it and we've got the level marked out, if we undo all that, boy, are we going to slam the heck out of that bid when it comes to there. Just being prepared for it. Let's have a look at something else. Let's pick out any stock this could be, but I'm just going to pick out Snapchat, but it could be anything because we've done a currency pair. Now let's look at earnings. So we've kind of had earnings or after earnings or whatever it may be, but a big gap in the stock, right? We gap down from where we about $14 down to $12. So big, huge gap. A lot of people are participating in it. Rolled right over in the day. Who cares? Again, whether it's earnings, whether it's something. Point is eyeballs on the stock. I can see good volume in that. So I think this is a day 1. Day 1. So what I do, we have marked out our high from that day. Let's go to a 5 minute actually and see if we can get a little bit more of a closer detail on this. Well, I zoom out for us because this is the kind of stuff that is going to make us good money if we're prepared for it. So here we go, that's better. So day 1 play, or day 1 should I say, we've seen a lot of movement. Okay, not a lot of big range in the stock, but it's down a lot of eyeballs are on it, a lot of volume is done. Okay, so we mark off things like, example here, good place to mark off our high, so our prior day's high. We can say, listen, a lot of resistance along that. Very, very interesting to do. Now let's put this in perspective. We've got two things we can do at the high. We can either try to breakout or we can fade it. Now obviously, hindsight, and we've got to be careful, we're not cherry picking here, a breakout was the right trade to make. However, even if we don't trade that breakout, even if we're fading it, we're getting stopped, we still know, look at this level. Only this level has come into play because of the prior day's level. At this point, it's got no indication that's even a key level. But because we're prepared, we've watched the prior day, we've marked down that high, we've marked down our low, and listen, it's gapped up, it's pushed up, it's kind of broken through it. Okay, reasonably bullish. Do we buy the breakout? Doesn't matter how we position ourselves, but the point is we're prepared. There's the high. If, let's say we did, let's say we thought that was kind of the theme we saw with this particular stock, it gapped lower, and then multiple days after we had a little bit of a run. Let's say we're prepared for that. So the line in the sand would be that day one high. Or if we weren't prepared for that, we'd say, listen, we've seen the breakout, I want to buy a pullback. Where's it going to pull back to? Hey, why not pull back to the really key level we had before? The point is, guys, is day one, get your levels. Where's your levels? Where's your highs? Where's your lows? Where's your support? Where's your resistance? Where's your congestion points? You know, how did it behave? Where did it close? You know, what did it do? And then use that as a kind of a benchmark for trading the next day. Have your trade premise ready, have your thesis ready, have your ideas ready, and mold those in conjunction with your support, your resistances, the movements, and then being extra prepared because you know you've got a high probability of those trades working than if it was just a normal day. Alright guys, that was the day 2 trading strategy. Let me know comments below, in the comment section below, and if you haven't subscribed, then please consider doing so for more videos from me and other traders on this channel. Take care, see you in the next one, bye bye.